Okay, so we hopefully have fixed the audio issue. If you could let me know if there is still a problem. Much better now. Excellent. Thanks, guys.
Great, thank you. Sorry about that.
Apologies for that.
Didn't miss much.
No. So really, just today we're looking at what some of the announcements were in the budget last night, bearing in mind that it is a pre-election budget. So there'll be a few sweeteners in there, but also some things in there that I think have been announced previously as the government's been ramping up ready for the election. So looking at some setting the scene, what's the economy looking like, etc. Some personal and business tax issues. We've said superannuation in there, but we'll see that there wasn't really a lot going on there, and some tax admin matters. All right, so where do we? Okay, so setting the scene, Brett.
So I suppose just a bit of a snapshot of where the budget has the economy currently or historically, and also where they expect it to be over what's called the forward estimates, which is essentially the next 4 years. So right now, real GDP growth, it's sitting, they're forecasting it to be about 1.5%, and then increasing over the next couple of years to about 2.25%. Now, remembering that this is in the backdrop of what is essentially turbulent international economic times. The economy is slowing both in China and America, and with essentially a tariff war that is potentially going to be raging, it's actually expected that that could impact our GDP by about 0.25%. So when you're talking about small margins as far as what is currently our GDP numbers or percentages, that's a reasonable impact. And even the recent Cyclone Alfred event that we had here in southeast Queensland, that alone impacted our GDP by about 0.25%. So it doesn't take much if you like to throw things out, is really what I'm getting to there. Probably the most pleasing thing is around the headline inflation figure. As you can see, it was up to 8%, and that's obviously why the Reserve Bank was ramping up their interest rates as much as they were. They're forecasting that to decrease to within what's called the band, which is essentially the comfort zone that the RBA likes, which is around 2.5%. So that occurring is a good thing. Now, once again, that can still be impacted essentially by those tariffs that we're talking about, depending on what levers are pulled and what it may mean for us. So you may have heard, for argument's sake, that the American pharmaceutical companies don't like our PBS system, and that they want to impose tariffs, I suppose, or some sort of financial consequence for that, which then means our medicines potentially could be more expensive. So that'll be interesting to sort of see how this whole economic condition, I suppose, plays out over the next at least 3 years. As far as revenue and spending goes, so essentially the revenue is expected to be $750 billion, where expenses is $785. So what that essentially means is that we're spending more than we're earning as a country. And you can see there the breakdowns between all the different elements. But I suppose just more broadly, tax revenue as GDP is around 30%. So of everything that we produce, sell, a third of it goes to tax revenue. 25% of that is Commonwealth revenue, which is what we're talking about today, and 5% goes to the states. Of the total revenue collected, about 40% is from personal income tax, 22% from companies, 12% from GST, with the remainder from other revenue items. So excise, state taxes, things like that. And just as an interesting point that I sort of came across today that is really highlights, I think, why we need tax reform in Australia, but we're unlikely to see it given our current political environment, is that changes to the tax mix by 5% in any form involves policies of around $40 billion. So that's roughly how much we spend on the entire defence spending budget. So a mere 5% moving it from income tax to company tax, for argument's sake, that's a $40 billion policy shift. So it's not an easy thing to do, and politically very hard to do.
And also explains some of the reticence, I guess, to change the mix from income taxes to GST as well.
100%, 100%.
Okay, so slide issue. So just in relation to personal taxes, now there's a few, I guess, things that came through as well, a couple of things that came through as a bit of a surprise last night. One was a proposed change to tax rates over the next couple of years. So there's not a lot of change, I guess, but there's a 1% change from 1 July 2026 and a further 1% change in 1 July 2027. So we're still a little way off before they kick in, and it really only impacts the band between $18,200 and $45,000, which essentially means that it impacts on everybody that earns a, I guess the average salary, but above 40 or 45,000 and above. But it is a little bit of a wait until we actually see anything in relation to that. So it's I guess it was touted a little bit last night as a way to help with these cost of living pressures that everybody is feeling, but there is like I said, a bit of a delay in that. And it's likely too that with the limited parliamentary sitting days between now and the election, which will be in May sometime, it's unlikely that these proposed tax cuts are actually going to be legislated before the election. So it's really contingent upon the Labor government being re-elected and them being able to secure passage of that legislation through the Parliament in the next election or next Parliament.
Yeah, well, I suppose just on that point too, Kim, a couple of things. I did notice on the Senate notice papers today, they did have some budget bills that they were going to look at. Now, they didn't actually specify which ones, obviously, because when they released the daily paper, they didn't actually probably have the name of the bills. Or didn't want to make them public at any rate. So it might happen today, but I would be really surprised.
I think there'll be an effort to push them through.
Yeah.
It's just really a matter of whether there's any pushback. I think the opposition did express last night that they weren't in favour of them. So,
and the Greens said they would support it if it was a standalone bill.
Yeah.
So I suppose just to explain that a little bit, often what a government will do, regardless of who they are, is they will actually bundle bills together to pass them as one, as opposed to introducing separate pieces of legislation to pass through Parliament. Now, so the Greens are saying if it is just a bill that talks about changing these tax rates, then they would pass it. If they bundle it with something else that perhaps isn't as favourable, then they might not. So I think that'll be interesting to see how that plays out.
Yeah, I think so. I think there's a few things in play there.
Yeah.
But like I said, there's still a delay anyway. So.
Yeah, and given that delay, I do agree it is more an election promise as opposed to a proper budget measure, so to speak.
That's true. As with most budgets, when they come through, there are also changes to the Medicare levy low income thresholds that they will increase slightly in the 24-25 year. I've just set those out there on the slide for everybody to see, but that is a regular change that happens through the system each year. One of the other announcements, and this was previously announced late last year, was the intention to reduce all outstanding help debts and other student debts by 20% prior to the indexation being applied on the 1st of July 2025. And also the intention to increase the minimum repayment threshold, which is currently at $54,435, up to $67,000. So there is a significant, I guess, benefit there for those of you that have help debts and are looking at potentially breaching that 54.5 grand threshold this year. But also those of you that are looking at what the quantum of your help debt is, that if the debt is reduced by 20% this year, then yeah, that is a significant help, I think.
And that also is on.
Pardon the pun.
And that in addition to that as well, there was a changing of the interest component that they were charging on it as well.
That's true, and which has really only become an issue in the last couple of years, as interest rates have increased so significantly. It does impact on a lot of things, such as the indexation of the help debts. Yes.
I know my daughter's very happy about this.
I imagine so. So I guess even though it's an election year, unfortunately there was really nothing else in the budget last night in relation to individuals. So in relation to the business side of things, the small business instant asset write-off, I get questions about this quite regularly. Currently, the way that the legislation operates is that for the 24-25 year, the instant asset write-off for small businesses has reverted back to $1,000. So there has been a bill presented to Parliament to increase that threshold to $20,000, but that hasn't been passed by the House or the Senate. There seems to be some resistance to that. And it's probably unlikely that given the toing and froing that we've seen over the last few months in relation to it, it's probably unlikely that we're going to see any certainty before the 30th of June. I'm happy to be proven wrong on that one. It'd be nice, but yeah, it looks like it might be a challenge. Having said that, the increase in the threshold to $20,000 could still be legislated after the 30th of June 25, but it won't really impact on the buying decisions of businesses. It'll really only impact on the tax treatment of the assets that are acquired, so how we actually treat them for tax and write them off.
Which defeats the purpose of why they introduced it.
Exactly right. It does fly in the face of that a little bit, but yeah, for those of you that are keeping an eye out for that, just keep in mind that it is only $1,000 at this point in time until we hopefully get something through.
And I appreciate that obviously the legislation does say 1,000, but given that this $20,000 figure has been around for a number of years and the bill has been before Parliament for almost 12 months, I wonder what that will mean if people have made purchases expecting that deduction. I suppose they just can't get it.
Yeah, that's exactly right.
Okay.
Yeah, so it's something that I know that the profession and number of business organisations have been touting for to try and encourage the government to just leave it as a $20,000 uplifted from 1,000, but yeah, there is some resistance to that, unfortunately. Energy bill relief. So last year we did have some energy bill relief provided to individuals and also to small businesses. That will continue this year. And I did mention earlier that there wasn't really much else in there for individuals, but this will impact on individuals as well. So there's a rebate being provided by the government of $75 a quarter to reduce energy bills. So like I said, households and small businesses from the 1st of July 2025 until 31st of December. So essentially 2 quarters, totaling $150, and the amount will automatically be applied to your electricity bills on those quarterly instalments. So they will continue to flow through at least until the end of this year, is the intention. The foreign resident CGT regime, this was actually announced last year, and the intention was to clarify and also broaden the types of assets that are included in this foreign resident CGT withhold or CGT regime. It was really looking at modifying the tests that are required to be satisfied in order to, that may require an individual to pay CGT if they're a foreign resident, and also the notification of particular transactions. So foreign residents, if they were disposing of shares or other membership interests in entities that were more than $20 million, they needed to notify the tax office prior to the transaction actually being executed. This has, there's been a fair bit of discussion about how it would actually work over the last 12 months or so. So the start date has now been deferred from the 1st of July this year to later in the year. So either the later of
whenever,
yeah, the later of the 1st of October this year, or the start of the quarter after the legislation's been passed.
Okay.
So if it's not passed till December, then the start date would be the 1st of January 26. So it's still there. It hasn't gone away, but it has been deferred because we actually don't know what the detail is.
And look, I know it's normal policy, so to speak, in when legislation is passed, that it does start the quarter after it's introduced, like for a lot of those sort of things. But I think it's evident that the government is actually identifying that this is a problem when they actually had it in their papers that it will start on one of these particular days whenever it actually is passed.
Yeah, yeah, that's exactly right. Yeah. Not-for-profits, there hasn't really been a lot of, wasn't a lot in the budget in relation to not-for-profits, but the deductible gift recipient list has been updated. It's usually updated each year to include, either include or remove certain organisations. So it's always a good idea if you're looking at making deductions or donations to deductible gift recipients, and then ensuring that they are actually on that list. Just as an aside, for those of you that deal with not-for-profits or are in a not-for-profit, then the not-for-profit returns for the 24 year are actually due on Monday. So heads up. Indirect taxes, there was a little bit going on in this space in an effort to support the, I guess, alcohol industry, so beer and wine, and also the hospitality industry. The indexation on draft beer, excise, and those excise equivalent, customs duty and the like, is going to be paused for 2 years, so from August this year. There's also an increase in the cap for certain excise remission from $350,000 to $400,000 for some eligible alcohol manufacturers. And also the wine equalisation tax producer rebate is the threshold for that is it's also increasing from $350,000 to $400,000. That's from 1 July 2026. Tariffs on goods from Russia and Belarus have been extended for another 2 years till the end of October 2027 as well.
The interesting thing with this one, Kim, I suppose a couple of points. That indexation on the draft beer, I think they're trying to pitch that as a cost of living measure, which I find interesting. Because it's actually, there's a significant, I think it's like $1.30 for a normal beer of tax, indirect tax excise, that is on a $10 beer.
Right.
So it's not insignificant. And even on a bottle of scotch, it's about $29. So which is a fair bit.
It is a fair bit, yeah.
And
not stopping us drinking it.
No, it's not. Well, probably not. Although beer consumption has decreased over the years.
Exactly right. Yes.
But what I also found interesting is that the excise they're expecting through tobacco sales, they're forecasting a $6.9 billion drop. And they're putting that down mainly not because of the cost of buying a cigarette and what it means, but actually through the black market. And some commentary I was listening to last night was essentially saying that the missed opportunity there was, rather than take that revenue, that excise revenue, and put it towards programs to help people either stop smoking or for health or anything like that, it went into consolidated revenue. So all they've really done is incentivise the black market, which is interesting way to think about it.
Yeah, that's right. And we'll see, there's continued action in relation to that black market as well in the administration side of things. So yeah, it's a big beast to try and wrangle, I think.
Yeah.
Superannuation.
My turn. And I've got this much to say.
This is the only slide.
So when they release the budget papers, budget paper 2 is the one that has all the interesting detail. Normally it's about 200 to 300 pages. This year it was the sum total of about 90. If you did a Control F on superannuation, as I did, it appears twice, both of which are integrity measures around payroll and super guarantee, that sort of thing. I think it's fair to say that this is the first time in probably 25 years that I can recall there has never actually been a superannuation measure in a budget, which is interesting within itself. I think as much as anything, though, the silence means a lot. And what I mean by that is that the SGC rate that is currently 11.5% will go up, is still scheduled to go up to 12%. So that is essentially still going to happen. And what's been known as the $3 million tax, or the Div 296 tax for superannuation, that has been around for a little while as far as a proposal. The bill is currently in the Senate and is stuck in the Senate. It still has a 1 July 2025 commencement date, even despite the fact that when it was first introduced, the government wanted to give taxpayers 12 months to prepare for this change of legislation. That's currently still factored into the revenue targets and the forward estimates. The mechanism behind it doesn't appear to have been suggested to change, because it is not within the budget that they're changing how it's calculated, or the revenue that it was proposed to generate has changed. So what does that really mean? Look, it's highly unlikely in its current form that it will pass the Senate in the next 2 days, which is really, as Kim mentioned earlier, all we have as far as sitting days for legislation to pass before the election. So what will happen is that bill, along with anything else that's sitting before Senate, once the election's called, they'll essentially get thrown out, and the new government, whichever side or whoever that may be, will have to introduce new legislation. So I'm expecting that this will become almost like an election policy that the Labor government will take to the next election, or a policy, sorry, the Labor government will take to the next election as part of their economic strategy.
Well, it's still in the budget estimates. So,
correct. Yeah.
So yeah,
I think
it's still there. They're not willing to give up on it at this stage.
Yeah.
But yeah, it will be something that will be in play over the next little while. And given the discussions about it over the last 12 months or so, I imagine those will continue until something changes, at least in some shape or form, to make it more palatable to the market. Yeah.
So that's it for me.
Yeah, that's So tax administration. Yes, some of the things that have been that were announced that have a tax admin sort of flavour about them. Restrictions on foreign ownership and housing. So some of you may have heard that there's going to be a ban on foreign persons, including temporary residents and foreign-owned companies, from purchasing established residential dwellings for 2 years from the 1st of April, unless there's an exception that applies. And the exceptions that have been announced are where those investments significantly increase the housing supply or support the availability of housing on a really commercial scale here in Australia, and also situations where there might be purchases of housing by foreign-owned entities for workers that need them to actually build projects and conduct projects and the like. So it is something that is still intended to apply from next Tuesday, I think it is. Interestingly, there's also been some additional funding that's been provided to the ATO. So over the next 4 years, they will receive some additional funding to enforce this ban, and the Treasury and ATO are being provided with additional funding to implement the audit program and look at how they look at their compliance approach, particularly in relation to land banking that might be happening around the place. Okay, so in relation to ATO funding, the budget last night said that the ATO is going to be provided with $999 million.
Not $1 billion.
$1 billion. Yes, over the next, when the number gets that high, I don't know why they didn't just add the other
Correct.
1 million, but anyway, over the next 4 years to expand its compliance activities. So as tax agents, I think we've noticed over the last few years, there has been an education focus for taxpayers, but also for tax agents on how the ATO is looking at particular areas. And I think about Division 7A, for example, there's been a big education push over the last 18 months about Division 7A. And I think this increased funding for compliance activities is an example of, well, we've educated you over a period of time, and now the compliance activities are going to start. You can't say you haven't been told, essentially. So particular task forces and programs that the ATO have include the tax avoidance task force, which is mainly aimed at the large end of town, so multinationals and large taxpayers. The shadow economy compliance program includes quite a number of different areas, I guess. Worker exploitation, so that talks about things like not paying super and not taking PAYG out, etc. Underreporting of taxable income is a very wide area that falls within this program. Illicit tobacco, as we mentioned before, and the always very vague other shadow economy activity.
That's just cash economy, isn't it?
Cash economy, yeah, all sorts of things can fall into there. There is a personal income tax compliance program, which is going to be aimed at the tax office reaching out to taxpayers themselves to advise them that, well, maybe you should be doing this, or have you thought about how you've disclosed this in your tax return? A bit of an education process, the preventative side of things, and then the corrective activities. So that's probably more the review and the audit side of things. So we'll see a bit of an increase in how that is administered over the next little while. The actual, there's a lot of talk over the years about multinationals not paying their fair share of tax and the like. When you actually drill down into the numbers, the level of personal income tax that is not paid is quite significant as well. So this is quite a big focus of the ATO.
Well, the ATO have just announced a review into lawyers.
Exactly.
Into not lodging tax returns or underpaying.
Yes. Yeah. So it's yeah, and a big area that they need that from a revenue perspective, they need to focus on. And there's also the tax integrity program. So this is looking at the timely payment of tax and superannuation. There's always a lot of talk about how we whether somebody does or doesn't pay tax along the lines, for whether they're in a company or individually and the like. It's also important to ensure that these taxes and superannuation and the like are actually paid when they should be paid. So it's not just about whether it's paid, but it's when it's paid as well. And there is an increased focus on that going forward. And
yeah, the tax office data match or interrogate something like it's over 100 billion transactions a year.
Yeah.
So yeah, and if they're going to be given another, let's call it 999 million extra to undertake those sort of activities, you can only imagine what the depth that they'll be able to go to.
Yeah,
I suppose.
the data matching is quite significant now.
Yeah.
And so it's sort of almost, some of it's low hanging fruit to be able to work out from a timing perspective. If something's been paid on time, it's you know, it's easy to find. There's also been quite a bit of chat over the last 18 months, 2 years, I guess, in relation to tax practitioners and how we conduct ourselves, our quality management activities, our compliance with the rules and regulations of being a tax agent. So there's been additional funds being provided to the Tax Practitioner Board to help it strengthen the sanctions that are available to it to sanction tax agents that haven't been undertaking their work in the way that's regulated and by the Tax Agent Services Act. Modernise the framework. The framework of the Tax Practitioners Board, I think, has been found wanting over the last couple of years, well, as a result of what's been happening over the last 2 or 3 years. So modernising that to make it a bit more 2025-ish, you know, fit for purpose. And there'll be also additional compliance targeting of high risk practitioners. I think we've all seen over the last, you know, like I said, couple of years, that an increased focus on how tax agents provide services to clients and an increase in, like I said, quality management type systems and the like. That doesn't seem to be going to go away. Probably going to increase, I think. It's just a matter of us being more efficient in how we deal with it and how we process those, you know, those things.
And I think what's interesting as part of all that, Kim, is that the Tax Practitioner Board, with those legislative changes that have come through, now essentially means that all accountants have to operate as if they're a member of a CPA, CA, or the Institute of Practicing Accountants, the IPAs. That is, they've got to operate under the accounting standards, so that quality assurance manual piece. Previously, you could be a tax agent and not be a member of one of the professional bodies and not have to worry about accounting standards or some of that other stuff, administration stuff, if you like.
The professional standards stuff.
Yeah, correct. Whereas now they're essentially putting everyone on the same plane, which will mean a massive shift for some practitioners because they haven't had to deal with quality manuals or the accounting standard approaches before.
Yeah, that's right. Yeah, I think we're, you know, we've seen a significant change over the last little while. I think we will continue to see that, and we'll see more and more compliance activity coming out of the Tax Practitioner Board, as well as the professional associations. Yeah.
Well, and I think that what the last couple of years have shown us is that they've all taken a bit of a clip around the ear, and they'll want to get some runs on the board to show that they are actually doing what they should be doing as far as that regulation piece.
Yes, that's right. So I guess when we looked at the budget last night, there was, as you can see, that with things that we've talked through, there wasn't a lot in there, which interestingly for an election budget, we sort of didn't expect that there would be a lot in there, particularly a lot of significant change or hard changes in there because it's an election year. However, the election sweeteners that we would normally see were not as apparent as I would have hoped as well. There's not really a lot of those in there either.
Well, as we were sort of saying, Kim, if you're going to spend $17 billion on tax cuts, for argument's sake, you think they might have had it more targeted to their constituents, or what is commonly their constituents. Yeah.
So it's, you know, it's an interesting budget. We'll see. Brett and I are both expecting an election to be called in the next few days. So there are, interestingly though, you know, always other things that maybe haven't been mentioned in the budget that are still hanging around that we still might be waiting on. So just as a summary, here are some measures that have been announced in recent years that we're still waiting on being enacted. So we've been talking about as tax advisors looking at, tax residency for corporates, for super funds, for individuals, for a number of years. Those things have been announced in prior budgets, and we still don't have any real clarity on that. Getting a deduction for general interest charges and shortfall interest charges. That was an announcement late last year. It is currently before Parliament. So the proposal is that from 1 July this year, there'll be no further deductions for GIC and SIC. Division 7A, it's been around for a long time. Sometimes it's the bane of my existence. There was a proposal to revamp and essentially start from scratch, really, of Division 7A back when the 2016-17 budget was handed down. That still hasn't happened. So we're still chipping away at little bits and pieces. And those of you that have been listening to commentary in recent weeks, the recent Bendel decision does have an impact on trusts and Division 7A. FBT and car parking is another one that was announced, back in March 22. We still haven't seen anything on that. Payday super was announced a couple of years ago. We still don't have that. So there's quite a few things that are still around that are waiting in the wings for somebody to do something with. I acknowledge that there's been a fair bit going on in the world over the last little while. So there's a matter of priorities, I guess, but these are things that to provide certainty to taxpayers, it'd be good to either say, no, we're not doing anything on it, or yes, we are, and this is the plan. So,
but I suppose, Kim, this is why I don't like to jump at shadows and worry about bills or proposals that aren't actually legislated, because they can say that they want to do things in budgets or even just policy announcements, but unless it's actually legislated, you don't know if it's going to happen.
This is true. Yeah, I think it's being aware of it is important, so that you can be ready to jump if you need to.
Yeah, correct.
But yes, it is difficult, particularly when we look at some of these things. I remember with Div 7A, when that was first announced, there was quite a lot of chatter about restructuring things to be able to deal with it. But then here we are, many years later, and still nothing. So yeah.
Did it sort of get like the 97 Tax Act where it just got too hard to redo?
Gets too hard, yeah. So then we'll just go
up.
And lastly, in the budgets, there's always something that's a little bit obscure that may not affect anyone or us individually, but it's a bit obscure. Brett and I always try to find something in the budget that's a bit obscure. The two things that we've identified this year are that there's a fish called the Magean skate. There's an additional $3 million being provided to develop or to continue a captive breeding program. I didn't know anything about this animal till just recently, but
and now you're an expert, Kim.
Apparently, a Google rabbit hole. So apparently it only lives in, I think it's the Macquarie Harbour in Tasmania, and has been around for thousands of years, but is under threat because of the fishing pools, salmon fishing and pools that are down there in that harbour. So there is a captive breeding program that apparently is quite successful. So they're looking to put more money into that. Here's a photo of it on the slide for you. And also giant pandas. The giant pandas are lovable, big, dopey looking things that Adelaide Zoo has a couple of them, and the federal government is providing $3.8 million over 5 years to alongside the South Australian government to help support the giant pandas in Adelaide Zoo and all of the bamboo that they panda diplomacy. It's a thing.
It is a thing. Right. It is a thing.
So a couple of obscure things to sign off with. So on that note, we'd just like to say thank you everybody for tuning in today.
And suffering with the audio problems at the beginning.
Yes, we
Apologies for that.
apologise for the audio problems, and if you've got any questions about the session today, then please feel free to reach out to Brett or myself, and we'll try and answer your questions for you.
Nothing in the budget for me, Kim.
Excellent. All right.
Thank you.
Thanks very much, everybody.